Hi, this is Randy Finney with Right Side of the Chart, and today is Tuesday, February 25th, 2020. What I wanted to do is a quick update on the markets. I do my best to get out static charts. I know that's a lot easier for those of you that are either working or for whatever reason don't have a lot of time to listen to the videos. I do try to get those out to you, and I also like to then follow up with videos because it lets me kind of communicate a lot more. That's trading. There's a lot of moving parts. It's not as simple as here's a chart, here's my preferred scenario. It's what happens if that doesn't work out. What other developments or things might happen. So I'm doing this video for those of you that have time to watch. All right, I wanted to, I made mention. I posted it first in the comment section last night. I encourage you, especially when the markets are moving, or if you're interested in any particular instrument. For example, here, let me drag a monitor, another page over from this monitor here. 1 second, I'll do that. And here we go. So let's just say you go to the home page and you're interested in gold and silver. So we'll click home, and you can go into those threads, and a lot of times there's follow-up questions, comments, things I'll put myself. And so again, you can always subscribe to a post right there if you want to receive any new follow-up comments made on that post, or new replies only to your comments if you ask me a question. For example, on the gold and silver today, I posted a setup here for platinum right there, whether it's platinum futures or PPLT. I don't always have time to post every chart. There's multiple ETFs for instruments. And the futures are really the closest thing to the raw commodity. I mean, that's the truest price action. Plus, they trade virtually around the clock, so you're seeing levels you don't see everywhere else. Here, I'll expand that. And that's it. So there's platinum showing you 3 objective buy points, A, B, or C on the breakout, any or all of the above, with a stop somewhat below. And then a couple of other questions there, and I'm just picking on this one. I don't know why. Just showing you the example that I do add additional follow-up commentary. Oh, and one of that was last night, for example, in the update, closing market update. Late, it was after 11 o'clock, probably almost midnight. I mentioned, somebody asked, I actually logged onto the site. I usually don't get on at night. I study charts, do everything else, but I wanted to let everyone know, because I kind of changed my tune and my positioning from where I did the end of day market wrap video. And so someone asked, get that you're open to a short-term bounce, but it's also fair to say that the medium term you're sold in the bearish case. And I said, yes, medium term bearish. And then I said, that, hey, I actually changed my tune and positioning. So ES had bounced up, although NQ wasn't at one of my resistance levels. Again, I look at ES, SPY traders, ES traders. And so that's where I reverse back. So pretty much gained that relatively small bounce yesterday off the lows with the longs and back out. And this is what I favor. So this is what I want to do today on the charts as we go over. Show you what I'm looking at, where it might be, where I might be wrong, and where to pull the plug if so. But as of now, that's the way I'm leaning. And I always say this: don't. This is not a follow me site. I'll flip in and out of position. Sometimes I'm in and out of NQ or RTY or even ES if I happen to trade it. I can be in and out of those a dozen times a day on certain days. Usually not that much, but 3, 4 reversals long to short when I'm active trading is not unusual in my trading account. What do I see here? Well, number one, these potential flags. They show well on SPY and QQQ. I'm going to get to it in a second. So that is potential flag in action. And that, let me just say, is a lot more bearish than this. Right now, I posted these targets here, about 88.90. I've talked on that level for a long time on NQ. It was a pretty important level back here. That is my near-term target. What would happen then, you'd have, if we do get a reversal there, a meaningful bounce, you'd have the bear flags would sort of be foiled, but I want to make mention there. So there's a lot of possibilities. There always are. We could just reverse today. So really what I think you want to watch right now is today's highs. Remember yesterday I showed you how, and I'll get to in a second, QQQ were locked kind of in this sideways trading range all day. Same thing with the futures. And so an upside break would be bullish, especially impulsive break, not just a little pop low, where a downside break would be bearish. You have this minor trend line here. Of course, you have yesterday's lows, which are very important level. Anytime you have a big drop like we did yesterday, well, it was one of the biggest drops in years, actually in the last decade. Wall Street Journal did a piece on it this morning, kind of put the drop in perspective. with some of the other big drops, that is. All right, so that's it right now. That's what I'm looking at. And I'm open to, instead of covering and reversing there, to just trailing stops down, because again, if those flags play out, take the measured target, at least that move down. You might consider that the flagpole, but I'd say at least this move down. Let me measure it for you in percentage terms, because I haven't done that. That's about 5%, that line right there. Yeah, I need to grab it and move it down here, and that's the top of the flag. No, 5.76, almost 6%. Oh, look at that. Takes us right down to that 87. It never fails to amaze me how often that I'll take a measured target, whether it's in this case a bear flag continuation pattern, anything, you name it, head and shoulders pattern, cup and handle pattern, bullish falling wedge, rising wedge, and then take the measured target, and it'll come right out to, well, you know, a well-defined support level. So there it is, guys. There's the potential right now for, if you thought yesterday was ugly, another. Now again, the measured target is off the high. That's how you take the that's how these bear flag patterns work when you're measuring them out. Again, you add to the high point of the flag right there. So that's it. If we break down impulsively, undercut yesterday's lows, although I showed you this being my target earlier, I'm very much open to this, and at that point I can tell you I will most likely just trail stops down at that point and see if I can hold out for the big shebang here. Again, first things first, we have to take out today's lows. So let's look at ES real quick, and then I'll get to SPY and QQQ. I do realize a lot of you guys don't trade futures, but you know, times like this where, although last night the movement in the futures was relatively muted, we didn't have any big moves. You know, right now it's just the players are on the starting field, and that's what happens at 9:30. So there it is. We took out yesterday's lows in ES as I'm doing this video. There's your potential flag. I have to zoom back out now. I zoomed in a little too tight, trying to show you that chart on the YouTube video. Of course, the charts on the site, you can pan and zoom when you click on them. But there it is. That's a big old flagpole. Scary looking, isn't it? And you know, these kind of moves happen when everybody thinks they can't happen. You know, when you get the people in the mindset, buy the dip, market's going to go up forever. And again, if everybody's doing that, everybody's long, this is what you call a crowded rush for the exits. A lot of things happen. Stops get hit. Significant support levels get taken out, more stops get hit, and then selling begets more selling. Plus, you get a crowded rush for the exits. When everybody's bullish, everybody's long, you know, it leaves nobody left to buy anymore, and everybody's trying to sell at the same time. So either way, there it is. We're coming right up now. We'll probably get a reaction there, and if we don't, that's pretty darn bearish if we slice through there, and it's not anything other than a brief momentum-fueled overshoot. So 3202 target is now hit as I'm doing this video. Looks like that was the, if I can get a pop-up box, sometimes it pops up, sometimes it doesn't. That's weird. There it is. Doesn't. 3221. If I'm on that candle, it's hard to zero in on that low. 3221. Yeah, close enough. Very close. If you can see that candlestick, there it is. The little tail down below. And remember, you don't want to, if you're going to cover, if 3200 or 3202 is your target, you want to cover a little bit above if that's what you want, because they could step in very fast and aggressively. And again, I'd be surprised not to see a reaction there. So now, what does this do? It lays out that scenario I drew out for you both last night in that comment section below that post, as well as this morning, of a divergent low. Now we can still take that out and potentially put in a divergent low over here. You don't have to have bullish divergence, but that's usually where I like to cover and reverse for the next trend up. Just like this divergent low right here, you know, divergent high, get short, divergent low, get long, or at least wait for the buy signal. And then it kind of indicates how far the next trend might go. Divergent high, you see it's all wash, rinse, repeat kind of stuff. So all right, I want to get the video out to you guys. So that's that. Let me just look at the indexes, show you what I was talking about on the 60-minute charts, flagging. Turned off the after-hour trades. Here, let me do this. Let me turn them back on, show you what that looks like. Edit chart properties, show the pre-market and after-hour trades. So you can see it here on the indexes. Here's QQQ. And you could do it with or without the after-hours trades. But you can see the similar flag pattern right there. Kind of flagging action, flagpole, yes, there's nothing there, but if this was a line chart, there would be a line. The line would go like this. And so whether you have a gap or not, that's still the flagpole. And then your measured target, would, yeah, just eyeballing it here. The way to do it on a charting program is you just draw, like I did before, draw a trend line, like I did with this one here. You draw a trend line. Remember we had that little flag I pointed out last week. You take the length of the flagpole, add it to where the flag breaks down. That gives you your measured target. As I said, that one was a perfect measurement. And then you had a reaction there which carried over into the after hours. It won't show you those after hour sessions. It's only going to show you last night's after hour trades and today's pre-market. So now essentially what we have here is just again, a potentially bigger flag, bigger flagpole, and see how the symmetry is intact. Little flagpole, little flag, little play out for a little move down. Potentially bigger flagpole, potentially bigger flag, potential for a bigger move down. That would probably, what I do is if I were to add that measured target, let's say it came right here, but I had support as I do there at 211.42, and I didn't have a support below it, which I might. I'll have to study this chart a little further, but I give it the benefit of the doubt, and that would be my target. Why try to milk out that extra, little bit and miss and avoid missing a fill if the market suddenly reverses fast? Because that's one thing I can tell you: when you trade a market like this, when the VIX is spiking and volatility is high, and the market's having these big 3% plus drops, when the bottom's in, it can reverse very fast. So you have to stay flexible, nimble, and if I could impart one piece of advice, if you're new to trading, investing, either stay out, watch and learn, kind of get a feel for things, or keep your position sizes very small. If you're trading the indexes or you're trading individual stocks in the market, or those stocks like Apple, Amazon, all those FANGs were down over 4% yesterday, maybe even 5 at one point. So when you have those daily price swings, you don't have to have a lot of money in your positions to make as much. It would have taken months, weeks or months to make that much in Apple or Facebook, recently, as we were slow grinding higher. So when you're swing trading, and this is the little volatility, you can have larger positions. Now when volatility expands, you want to keep your position size smaller. Again, otherwise you have a big position size. What's going to happen? The market's going to zig and zag against you, and you're going to second guess every little counter trend move against your position. And maybe rightfully so. Maybe the market reverses fast. So the other bit of advice is, everyone has to have stops. You need to pick your own stops that are commensurate with your risk tolerance, your loss allowance, and everything else. Run stops too tight in a volatile market, you're going to get shaken out of your trade. You run them too loose, you're going to lose a lot of money if things go against you. So you'll have to figure out that happy medium for yourself. As to, I'll give suggestions, of course, and it all depends on where you're targeting. That's the other thing in setting stops. I look at, if I'm targeting $5 on a stock or $10 profit, then I'll allow a 2, 3. Well, it depends on that. If it's a $10 stock, I can allow a $3 or a $10 profit target. I can allow a $3 stop allowance on that, or maybe even 4 or 2. It all depends on the trade. All right. One other thing I wanted to show you were the FANGs real quick. Apple. Here, let's turn off those pre-market trades. All right, so same story. We had that little spike down. I want to just show you here these potential flagging patterns here. Move down, flagpole. That's not the tool I wanted. I wanted this one. Flagging type action, and boom, Apple could actually overshoot. Looks like it pretty much hit that trend line support target I had before, but it could overshoot, and you can see some additional support levels, potential targets down below. Microsoft. Right on trend line support now. So if the flag breaks down, it's going to take out this trend line. In the video yesterday, I told you they had some of the key market leading stocks under support and some just above or at support. So there's a little dam, if you will, that can break here. And that would be these flags and some of these support levels as I'm rifling through these charts. Big old gap on Amazon. Gaps, once entered from above or below, quite often are backfilled. That's a big gap. It's an earnings gap. No bueno for Amazon if it drops, solidly into that gap, and Microsoft and everything else goes at the same time, and so that would help support that case for a larger drop than I indicated on those charts this morning. Alphabet, You have a lot of different variations, but there's one GOGL below trendline support, below that price support as well, or really right on it, close enough, but it's in a very precarious technical posture. It's below trendline support, trying to cling to this price support. If it breaks that, I don't see an iota of support until it comes down here at about 1365 or so. It doesn't guarantee it'll get there. It all depends on where QQQ and SPY and Apple and Amazon are at the same time. Are they hitting support? But if they all break, you're looking at potential downside in Alphabet, one of the world's largest companies, about another 4% downside, minimum really. And same thing on the other share class. Facebook, it's a story here. A lot of these stocks peaked on earnings a few weeks ago, and they've been stair-stepping lower, and recently broke support, and they're below. Like you can see, Facebook below support. So, I can run through these all day, and I'll probably get questions if there aren't any on the site now. I haven't seen about SOX, semiconductors, still, for the next big correction or bear market, which could, the next correction. Well, the next correction we know is underway. That's not a There's no question about that, but I wanted to say a little more downside. You want to see a solid break and a solid daily close below it, and then you have support right there, but that's SOX. I just want to point out the semiconductor ETF, semiconductor sector. This one, I like to use a chart of SOXX because it tracks this index, the PHLX SOX Semiconductor Index. That's the same one that SOXL, the 3-time long bullish semiconductor, or SOXS, the 3-time short. They track the same sector, except they're going to have decay because of their 3-time leverage. So this is a chart you want to use if you are been waiting for a long time to either short the semis for a swing short, or get out of your longs if you've been riding the wave up long. This is what needs to happen: a solid break and close below that trend line, and also you have support around 237. That should trigger a decent sell signal there on the semis. So we're not there yet. And so the takeaway, I showed you some stocks below support, others right at support, and here's the semis, one of the most important sectors, in the market. This is really they are the canary in the coal mine for the tech sector. So if they break down, it's usually an early indication that tech in general is going to follow suit if it hasn't already. So those are things I'm watching today, and we'll just have to see. Let's see if yesterday's lows were taken out in QQQ. They were, but not by a wide margin. That line, remember 220.26 yesterday? That was a low. We took it out, but so far we're not seeing an impulsive drop. In other words, the buyers are stepping in, trying to hold on to that support. If it gives way and they can't regain it shortly after it breaks, you'll probably see an impulsive leg down today. Otherwise, they could rally it up. There's nothing like a little dip below to clear out the stops. That's called a bear trap right there, or a stop raid. If there are a cluster of stops all set here, and we do this in reverse, that could be and would likely be quite bullish, especially if we move above yesterday's highs. They're somewhere around, call it 224 and change right there. So this is the range to watch right here. I'm favoring this, but again, I wouldn't bet the farm on it. I'm not betting the farm. I'm trading that way now, and depending on what happens today, I may be long. If we start to if it looks like we might get a short covering rally here, or even the buyers step in, and if we get above that range, again, there's a big old gap to be backfilled. Technically, the top of the gap is right here where we closed on Friday. And so that gap could be backfilled. That would be a huge move up. If so, that's why you can't get married to any one scenario. If you're bearish right now, and that happens, you're talking about almost better than a 4.5% rally for a full backfill. Or if you get up to the bottom there, there's some resistance there. That's probably most likely where the sellers would step in if that scenario happens. And that is should be right about 4%. Okay, so all right, I'll give you some targets, some things to watch for, and let me wrap this up, get the video out to you guys. I'll cover the other, individual trade ideas, Netflix, anything else that we have. I'll cover that in a separate update.